Welcome to part 3 of How to Trade the World's Financial Markets using the M33 process and signal. The first two parts of this presentation explained the underlying principles. This part will begin by defining the related tools and then finish up with practical demonstrations of how to use them. The easiest way to ensure you have all you need to add M33 to your own toolkit is to eavesdrop on someone thinking through the process unrehearsed during a typical market day. So after only a few remaining scripted insights, I will soon invite you to tag along live on regular intraday analyses and actual trades by active M33 users. In part 2 of this presentation, we introduced the M33 monitor frame with its price panel on top, the signal panel in the middle, and the alert panel on the bottom. In the complete version, there is also a fourth vertical panel to the right, showing the watch list from which the current ticker has been selected. I've accumulated a larger master list of tickers over some time and use it to carve off smaller working subsets of specialized items. If you'd like to do something similar, I suggest you begin slowly, take your time, and let your own lists accumulate gradually as you become interested in various sectors. My current foreign exchange list has 17 major tickers of interest. Then there are equities, indices, and volatility trackers for the most popular major stock markets. And so on, as I carve out another several specialized watch lists from my master list, including ones for sectors, commodities, and other countries, etc. Among the other remaining tools in the monitor frame is the tab bar at the very top of the display. It's highlighted in pale gray and allows one-touch movement through your most frequently used layouts. From left to right, mine starts with the pre-opening first look, then one used to update edges on some core ranges to get the day started, followed by more detailed drill down into such areas of the global economy as forex, interest rates, equities, economic sectors, commodities, other countries, and general research, etc. Meanwhile, back in the main M33 monitor, in addition to that tab bar across the top, the yellow arrow in the lower right corner of this slide points to another very powerful tool: the ability to toggle from a single frame monitoring a single ticker to multi-framed layouts that allow you to compare closely related tickers side by side, or up to as many as 6 or 8 representing whole sectors if you wish, which might make you wonder what happened to my earlier promise to keep things simple. Confronted with this kind of busy-looking thing, what do skilled traders look for amidst the apparent clutter? They seem to sit, almost motionless, sometimes for hours on end, and then suddenly, seemingly out of nowhere, they pounce or lunge. The mouse clicks, an order is executed, a position is opened, and this stuff we call trading actually begins. What lies at the heart of the M33 process? Well, brace yourself. You are far more nearly ready for action than you might realize. We completed our exploration of M33's principles in Part 1 and 2. Now we've pretty much finished exploring their associated tools, which means you have all you need to begin analyzing setups, watching for alerts, and acting on signals if you just spend a little time eavesdropping on actual case studies posted by other users of the M33 process. The week begins at 20:15 hours Sunday evening, New York time, which is already 10:15 Monday morning in Melbourne, where the first, and to my mind, the most important market resumes trading for the new week. When Hong Kong or Dubai or London or New York are only beginning to stir, Melbourne and Sydney are already seeding the master barometer ticker of them all, measuring whatever foolishness has been gurgling beneath the surface in Beijing or Pyongyang or Moscow over the weekend. It's called foreign exchange, the massive global system that greases the wheels of the entire human economy, negotiating exchange rates between and among all of the world's currencies. Money. So here goes. The remaining slides in this presentation, and those that will appear from now on independently as standalone mini videos commenting on actual M33 displays, will give you all you need to trade on your own. You'll find members of the online community very willing to lend a hand as well. One caution though, we rather strenuously avoid pretending to know what makes markets move. We have very little use for company or government policy pronouncements, but as long as your questions concern specific setups and trades, you'll be delighted with the response you get. In fact, we find that trying to describe setups clearly only increases our own understanding and trading skill. So let's begin this ad lib process of commenting on real, live market conditions. It's currently just a little after lunchtime on July 17th, 2023, and as you might expect, we're going to begin with Forex, and the first one we're looking at is the US dollar. You can see that it has come down from its upper edge, getting closer and closer to its lower edge. But as it approaches the lower edge, lo and behold, its signal is actually crossing above the background. Rather weak momentum, but the momentum has indeed now stopped going down and is starting to poke up a little bit. And the alert panel is mixed. It's got some time lenses pointing up and some pointing down. What's important in this is that it's coming close to its lower edge, but it's showing signs of beginning to turn up. We never trade on this type of thing. This is why it's only called an alert. It's not an actual order signal. One way to make a Forex currency more understandable is to pair it with one that it usually runs opposite to. In the dollar's case, let's have a look at the euro. So I've brought up the two-panel or two-frame screen where we have the euro on the right and the dollar on the left, and each of them has all three of the M33 panels: the price, the signal, and the alert. And look at this. the euro has done exactly the opposite. It's gone right up to its upper edge where the signal is beginning to cross over down. The momentum is beginning to cross over down. It still has a mixed alert panel, but it is showing signs where it could come off its upper edge and begin to come down, just as the dollar might come off its lower edge and begin to climb, which would be a situation where we could short the euro against the dollar. Let's try commodities. I've come over to the sixth tab up here, which is my commodities frame. And what we have up on the screen right now is WTI, West Texas Intermediate Crude Oil. And here you can see that it has been climbing and climbing and climbing. It got very close to its upper edge and then fell off. And you can see that the signal crossed over downwards exactly at the peak. You could have shorted it here. In fact, it might very well have been a short there because the momentum was increasing as well, and the alert panel had almost complete concordance. It was missing the weekly, but the daily 4 hour, 2 hour, 1 hour, 30 minute, 15 minute, 5 minute, and 1 minute were all pointing down. And that is a situation where I would not have hesitated when I saw this crossover here to short WTI and pocket a bit of profit. By the way, as it came down and down and down and then turned and crossed back up again, you can see here that it crossed above the blue right there. That's where I would have covered. So I would have made whatever profit there was between $76.94 and $74, which isn't bad at all. And especially when you consider that that all occurred between July 13th and July 17th. So that's only 4 days, and not only that, there was a weekend in there. So it's really only 2 trading days, Friday and Monday. Now, as we did with the currencies, let's go pop up a multi-panel view where we still have WTI on the left, but I brought up agriculture and corn in particular into adjacent panels. And as you might expect, when oil goes up, farmers hurt. When oil comes down, farmers rejoice. And in this case, as oil began to come down, agriculture started to go up. It had its crossover here on exactly the same day that oil started to go down, agriculture started to go up, and it turned and it crossed down again, indicating that we should take profit again at pretty much the same time. And you can see that the alert panel was fully concordant when it was coming down, fully concordant when it was going up, and very close to full concordance again when it started going down enough to take profit. And if you come over and look at corn, you'll see that corn, as a subset of agriculture, of course, is very much the same way. It's been coming down and down and down when oil was going up. It kind of panned out along the bottom, but then just as oil began to drop, corn started to come up again. Now please understand, it is not always like this. I'm showing you these so that you get to see the reasoning process. But in the case of corn, you can see it crossed up right here, and that's exactly when the price started to go up. And then it came over and crossed down here, indicating you should take profit, and that's exactly when you would have wanted to take profit. So, without being too grandiose about it right now, it's not always this clear, but I just wanted to give you an idea of the kind of thinking that goes on when we're staring at these panels, what it is that you're looking for. The remainder of learning to trade consists entirely of continuing to do lots of what we've just been doing. Analyze real trading tasks in real time. Don't fall victim to the sales pitches of the financial jargon industry. I therefore encourage you to seek out online threads where experienced M33 traders display their own case studies and willingly answer questions for folks wanting to further and develop their own M33 skills. If my 6-year-old grandson can crack a geode to discover the crystal gems inside, you can crack the trading process to grow your own savings. My only caution is to remember the admonition from part 1 of this series. If you don't feel comfortable with the proposed trade, reduce your position size until you do. Period. Nothing will boost your skills and success as quickly as simply using the tools over and over again. Then take your analyses to other traders and ask them if they see anything different. In barely a few weeks, you'll feel ready to try your first real trades using real money. And when in doubt, ask the old fart next door. When he gets stuck, he asks the kids. Sometimes just looking for them is enough to jog the answers. And at other times, the only need is to take a break. As always, the rough edges and inevitable goofs are all mine. Hopefully, plentiful insights will be all yours. Bye for now.